Well, good afternoon, everyone. Just a quick update from us on some interesting comments out of some Fed officials over the past couple of hours. We have had the Federal Reserve's John Williams, the New York president, out speaking over the last hour, and we've also had Loretta Mester, the Fed's Cleveland president, out over the last hour or two as well. We can see across the calendar if we have a quick look in terms of today. We have a bunch of speeches across the board with a bunch of different Fed speakers today. Essentially, what the two of them have said is that they both reiterate Jerome Powell's stance as of last week that 50 basis point rate hikes going forward might be appropriate. They seem to think the next two meetings should be 50 basis point rate hikes and have not offered any further guidance after that. Reason being for needing the rate hikes, obviously, as we know, the inflation, rampant inflation globally after supply chain issues post COVID-19 created a huge surge in demand for products, which is increased the price of goods and services around the globe. Couple that with the Russian-Ukraine situation and the rising cost of commodity prices, that has also multiplied the levels of inflation. Now, a reduction in that inflation, would leave the Fed unable to go more hawkish, as with the slow growth, with the contraction of Q1 in terms of the GDP, they will not want to go over the top and cause an economic recession. They won't want to hike the economy into recession, and a lot of hawkishness has been priced in over the course of the Fed. If we have a look to the dollar, we blow this chart up to the dollar, and have a look at that, you see this move higher. It looks pretty overextended. I've been calling for this for a pullback in this for a couple of weeks now. It just looks so overextended and ready for a pullback. We do, of course, need some catalyst for a pullback. Inflation tomorrow could prove a catalyst. As we can see, as we come over to the inflation figures, 8.5% as of last month. Consensus is for 8.1%, a miss of 0.4% on last month's figure, and then the core inflation rate 6.5% last month, with a consensus of 6% this month. As we come back to the charts then, and we mentioned that with the majority of the hawkishness priced in to the Fed, a lot of the hawkishness priced in to markets in terms of the dollar and in terms of stocks, it doesn't leave much room for more hawkishness, the far side of that when it comes to the Fed. So if we have a look then, where we can look to try and take some opportunities or look for some opportunities on a reduction in inflation, reducing the Fed from any further tightening past the 50 basis point hikes that the two speakers have mentioned today, the two presidents have mentioned today, that obviously leaves some very little room for further dollar upside and further stock downside. Now, if we do get that pullback, which is anticipated, it can create some good opportunities. Now, when markets get pretty overextended, once you do get that pullback, you can get quite sizable pullbacks. Now, in terms of where we look to take advantage, what we look to take advantage on, have a look to stocks. Stocks will probably be number one on the list for people, obviously with the dollar. We look at the S&P. The level I was mentioning, the S&P, was this level back here. Oops, I changed the color. Was this level back here? We can see this level back here. Now, I was mentioning that when we were here before the Fed last week, we actually ended up going up, testing it, and just turning straight around and moving back lower. So I think this is still the level for me to watch, although we are slightly away. Now, the currency pair that correlates with the S&P 500 mostly in terms of the majors is the Aussie. Now, we have a look to the Aussie and the RBA's hawkish tilt last week. They are more willing to hike interest rates into the future, which they have not been previously. They hiked interest rates last week, and they are going to hike probably at their next meeting as well. So that is a big shift in stance from where they were. And the Australian dollar continues to sell off, with stocks remaining pressured. So if we get that turnaround in stocks, if we get the removal of some extra hawkishness from the Fed with weak inflation numbers, that should prove positive for stocks. It should prove negative for the dollar. If something is positive for stocks and negative for the dollar, the Australian dollar is a good pair to trade. Couple that with the hawkish tilt from the RBA last week, could make for some good trading opportunities across the Aussie. In terms of the euro is always a good proxy for the US dollar, with them being so heavily trade related, and the dollar index being heavily skewed towards the euro, 57.6% to be exact. That could also open the door for some euro dollar longs as well if that plays out. We have a look, spoke about it already, but this big monthly level that we're at across euro dollar. Oops, I'll just draw that across there. Big monthly level across euro dollar. if we can get weak inflation, a removal of fears of further hawkishness from the Fed, this then should move higher. We are due a pullback anyway. You see the move lower that we've had. It's a big weekly time frame going all the way back to the beginning of last year. We've moved higher off the back of this head and shoulders, and then moved higher on a hawkish shift from the Fed. Now, all these moves have been because of a hawkish Fed, but none more so than dollar yen as we come across to here. Have a look at dollar yen again. This is a big weekly time frame. Stick it on the daily and blow the chart up. We can see that is clearly the most overextended out of all the majors. Now, as we zoom in a little bit and look at the chart, we're expecting a potential turnaround in the dollar, potential reversal in the dollar, potentially giving us a catalyst tomorrow in terms of the inflation figures. But we also are seeing a bit of a double top forming as well. Now, if we can get fundamentals aligning with the technicals, that creates the best trading opportunities for us. And this could be a scenario of that, double top forming. If you can get the weak inflation figures and push this lower, that should make for some bit of a pullback, some sort of a pullback. With this being the most overextended, you might expect that the pullback might be the most aggressive pulling back, but we'll have to see how that plays out. But there are a couple of different options, especially with dollar yen's relationship with US yields as well. If they begin to move lower and they fail up above that 3% figure as they are at the moment, this should cause some more downside pressure for dollar yen. But yeah, all eyes on this inflation figure tomorrow. See here, 130 tomorrow. We'll be definitely looking at that with good intention. Whether you look to try and trade it at the release or post release, or look to try and get involved, is up to you. Up to the way you trade, your sort of appetite for risk. But definitely we'll be keeping an eye on that going forward.